Hi, it's Saturday, April 10th, 2010. I'm Dennis Hudson at orangequant.com. And this will be a BAC forecast, Bank of America, stretching out over some distance of months. But first, some news broke yesterday, and I don't want to make two videos. I'm just going to cram this all into one. And I'll start in on this with this news. Something that happened, a court ruling yesterday, Friday, by U.S. District Court Judge Eldon Fallon. And it was one of the Drywall cases, actually 4 plaintiffs, and Mr. Fallon awarded $2.6 million to 4 plaintiffs jointly. The judgment was against Taishan Gypsum Company, a Chinese company, who didn't bother to show up in court. Another defendant, Nauf Plasterboard Tianjin, is proceeding through the courts, and it's also in the hands of Judge Fallon. And that's a subsidiary of a German company, by the way. The $2.6 million judgment is the first of these cases to have an award. Here's how it stacks up. You've got $2.6 million for 4 plaintiffs. You divide that by 4, you get $650,000 per plaintiff. Now, we had said earlier that there was an estimate that it was $100,000 to go back and rip out all the drywall, rip out all the electrical, plumbing, wiring, gas, air conditioning, everything. $100,000. But, in fact, there are appliances that are involved, and cabinets have to be replaced. For some reason that I don't quite understand, cabinets have to be replaced. So all the cabinetry, everything. So with all that and all the aggravation and so on, it's $650,000 per home. And that's only the exposure on property damages. So we were saying before that this would affect 100,000 to 200,000 homes. Actually, we're going to pick a middle ground here and say 150,000 homes. The 200,000 figure is the approximate number of new homes built per year, okay? So, we come up with $97.5 billion US dollars of total exposure and damages on this, and that's just property. When you start talking about health issues, which Mr. Fallon did not rule on, because that was apparently not brought into the case, that could quadruple this figure to something closer to $500 billion. So, the way this plays out, watch the bond market, because that's where China has most of its, is holding most of that U.S. debt. So they got to liquidate bonds. They got to step up. These companies don't have the money to do it. I mean, the people who run these companies will probably go on trial, or the China version of a trial, which involves something like a blindfold, a wall, and a cigarette. But China has to step up and fill any gap, because if they don't, the U.S. has an excuse to default on all that $1 trillion of debt to China. Watch the bond market. They're going to be dumping more bonds, I guarantee. Of course, the U.S. doesn't want them to dump bonds, because if they dump bonds, it drives down the price of the bond but raises the interest rate so that everybody else starts leaving equities and running into bonds, and that crashes the equity market. A little complicated. You got to sit and think about it. I don't want to take time here for that. Okay, I'm going to do the BAC forecast in order: quarterly, monthly, weekly, and then daily. Here's what we have on the quarterly. You can see it following that blue trend line upward. It's going to oscillate around that sum. Let's get to the next one. And I'll probably come back to this one. Now here's the BAC monthly. Shows an inflection at July 2010. it can go to about $22 this month. I say it can go. That's the upper end of it. Okay. Now on the BAC weekly, it's following that orange trend line. You can pause this and print this stuff out later, because I know we only got 10 minutes at YouTube here. It's following that orange trend line up there, and I've created something I don't usually do. I created those two pink lines. Those are synthetic trend lines from the FLIR 2 ebook that you can get at orangequant.com. And so I created a channel out of the pink ones, and you can see how price has been following along in that channel. I didn't base the trend lines on the channel of price. The trend lines come from something else, which is very simple to construct. There's not a lot of math here. All the heavy lifting of mathematics has been done for you a long time ago. You just sit there and draw 2 or 3 lines. You count a few things, and you're done. Bob's your uncle, as they say. And this pattern would appear to continue until about the week of June 8th, which is when the orange and that upper pink trend line intersect. And here's your daily. We're looking at around April 13th, which would be like Tuesday of next week. We're looking at an inflection there. So wherever that inflection is, if it's down, then you want to go long. If it's up, you want to go short. Just watch for the inflection. Now, backing up to the quarterly, we look like this back run could continue for about another year. I haven't measured how far it is out to this inflection out here. Looks like about a year. So we should see it continue along that blue trend line like that, oscillating, however, because you can see the oscillation has just begun in the previous quarter, and it's probably going to go above it and then maybe back below it like that. And on the monthly, you know, there's going to be an inflection scheduled here on the monthly for July of 2010, which means it'll probably dip below the pink trend line that it's following, but then return. It's going to oscillate, in other words, because we're looking at the quarterly, and that shows that it should continue to go up. And looking back at the weekly, you can see the special indicator that was not developed at Orangequant, it's someone else's. You can see that it has maxed out, and there needs to be some kind of pullback here after a time, which I assume would be the week of June 8. And back on the monthly, another special indicator shows the same thing. It's maxed out, but it can drift along at that upper end on the sign to about July. And that's on the monthly chart. It's best to print all these out and then compare them one to the other. Bottom line, my feeling right now is to go long on BAC. You might have a rough spot here and there, but I'd go long for about the next month, to be honest. Because when we look at the monthly, as I say, it can go to about $22 in April. Can go. Well, doesn't have to, but it can go there. Yeah, I'd go long for the rest of April. Absolutely. See, that max out that I'm going to circle right now, this maxed out area, it hasn't, the gray and the pink haven't crossed in that circled area yet. They haven't met. And once they do meet, they can continue, to stay up there a while. So I'm saying long, up to the neighborhood of about $21 maybe. I wouldn't trust it to 22, 20 or 21, and take my profit off the table. So that's all the news that's fit. Maybe I should give you the names of a couple of Treasury ETFs. Hold on, let me do that. There you go. TLT and IEF are the ETFs for Treasuries. I believe the TLT is the 20-year bond, and IEF is the 7 to 10-year notes. So if you're doing, you can trade those like stocks, or they are optionable, but there's tough liquidity on them, on the options. It might be a lot better with all this going on, though, so just take a look. Alrighty, I'm Dennis Hudson, orangequant.com. Have a nice week.